All right, welcome to your channel, My Personal Finance, where you get to interact with your executive financial advisor, Prosi Chimboa. Here we break down the different concepts that you have interfaced with in the financial services industry, the different concepts that you have interfaced with in money. Today, when you look at, if you've been following us and you have watched our previous videos, we have been discussing about insurance and the terms that are used in an insurance cover that have made it, that have seemed a bit complicated, a bit hard, or a bit out of this world for people. And the last one we discussed was surrendering. When you want to surrender your insurance, your life insurance cover, if it has not come to, if it has not matured, if it has not run, you have not run the race to the end, to the time that you said I will stop. If you said I'll stop at 5 years and you have stopped, and you want to stop it along the way, it qualifies for surrender. So the number of years you have run either qualify for surrender or not. So today we are here to talk about the other concepts that we have therein. We have what we call a lapse. What does lapse means? For example, if you have signed for a life cover, you have your policy, it is running, and for some reason you stopped paying. So usually these companies, that the insurance companies or the insurer, will tell you that if you have not paid between 1 to 3 months, you are in grace. In grace means that if anything happens to you, the benefits embedded in that insurance cover, in that life cover, will actually be paid out. But if you're out of the grace period and the policy, your policy statement reads lapse, it means that you, even if you died today and the statement reads lapse, your children, your beneficiaries will not receive those benefits. The claim will not be honored because it read the word lapse. However, even when it is in lapse, for example, if I happen to work closely with Prudential, so if you find yourself that you have not paid, your policy is in lapse for about 8 months, they give you about 2 years to bring back this policy to life. Of course, if anything happened to you, the uncertainties that are stated therein in your cover, if anything happened to you, that means that the policy will not be, the claim will not be honored. But when you have some money, you have received some money, just like you had a loan with the bank and they are saying we are taking your house. Likewise, even a life cover, because you know it is your family protection, it is aimed at achieving that idea that you long wanted to achieve. You have to respect that policy and do what you are supposed to do, so that you avoid the word lapse. Lapse means should you happen to pass on, your claim, your family claim, will not be honored. However, companies give different periods of time and within which you can come back and bring back your policy to life. Okay, it doesn't mean that it is completely dead, but then if you go beyond that given time, if for example Prudential has given you 2 years of lapsing and you're not doing anything about it, and it has come to 2 years of non-payment, automatically the policy cancels. So if your policy had qualified for the surrender cap, then you will get some money. If it did not qualify for surrender, you will walk away empty-handed. So for us to protect our money, because you do not come into sign up into these covers to lose money, no, but you need to understand how do you respect, how do you work within this contract for you to to smile to the bank, for you to be happy, for your family to be happy, for you to achieve that target which you wanted to do what? To achieve. So what I want us to understand now is that can we avoid, when you have, if you're watching right now and you have a life cover with any companies that we have here in Uganda. We have ISEA, we have UAP, we have Prudential, we have Sanlam, we have Jubilee, we have so many insurance covers around us. Go back and read your statement. Does it read in grace? Does it read lapse? Does it read outstanding? Go back and look and see, because these statements are accessible. If your statement is reading lapse, please wake up and make it active so that you don't lose money, and then so that your people, in the event that the uncertainty has happened, you do not go away empty-handed. So today, that is what we have learned. We have learned lapse. We have learned how to keep our policy running. We have learned that your statement reading lapse is not a good position to be. Okay, your policy should read in grace. Your policy should read no more. You know, it can even read in advance, like you have paid your premiums over and above what you're supposed to pay. So that will put your policy in a good position. You will not lose money. You will smile to the bank. The company will also smile in their business, and we all win-win. You know, the win-win situation. So that is lapse for us today. And I will come back. We are breaking down in these episodes that are running one after the other. We are breaking down the different terms used in a life cover policy. So I want to stop here today for this, because I stop and I want to pause so that you can ask those questions, what you have not understood, and then we can always do what? We can always come back and expound on what you've not understood, because there are so many terms that are used there. Because I want you to go into a life insurance cover when you know what exactly you have signed in for and how you are going to achieve and not to lose. So I want to stop here today for this particular episode, and I will return with other terms that I used within the policy document. Thank you.